welcome to today's webinar. We'll be starting in about 1 minute and just letting everybody join, just giving everybody a minute or so to come in. As you wait, one of our team will be posting a poll that perhaps the audience could complete while we let a few more people come in. I can see we've already got close to 70, 80 people in, but we'll just give everybody 1 minute. So if you give us 1 minute and then we'll start the webinar live. Welcome to today's webinar. I'm Paul Stannard, Chairman at Portugal Pathways and your host for today's webinar. It's my pleasure to guide you through today's panel discussion around the topic of how US connected individuals in Portugal can optimize their investments and income. In today's webinar, we'll be joined by experts in tax, both from a Portugal and a US perspective. Similarly, wealth managers that understand the difference between US structuring and European structuring based in Portugal. And we also have people from on the panel that come from a private wealth perspective. We have a panelist there, so we can talk about cross-border tax, financial planning with the experts to help you structure your investment income and assets accordingly. But before I go ahead and introduce today's panel, I would like to first go over the main topics of discussion for today's webinar. Throughout the session, we'll explore how you can craft investment strategies, navigate complex taxation laws between the two countries, ensure that you're set up tax efficiently for retirement planning or any other form of planning in terms of a smooth transition into Europe and Portugal, so that you've got a more friendly investment approach as a US connected citizen. By the end of the webinar, you'll hopefully get a clearer understanding of how to optimize your assets and income in both Portugal and the US. But always bear in mind that every person's situation is different. So the panelists may on occasions not be able to answer specific questions without more detail. So we'll take that offline. And if we can't answer anything either through the chat or in the panel discussion, don't worry, we will come back to you individually if you ask any questions, and we'll do that in the 48 hours after today's event. So what I'd like to do then is introduce our panel, which includes Chris Marson, who is the CEO of RTI Family Office with over 30 years of experience in managing significant international wealth, including knowledge of the US and UK and Portugal's marketplace and right across Europe. Joining Chris, we have Gary Donald, who is a Senior Wealth Manager at LGT Wealth Management, who have 316 billion under assets under management, and they have extensive knowledge and experience providing investment and wealth management solutions for US connected citizens in Portugal and across Europe, working alongside IFAs such as Beacon Global in Portugal. So we have Owen, who is the US regulated partner at Beacon Global, and has extensive experience of working with US tax laws, regulations as it relates to Portugal. And then finally, we're delighted to have Pedro Niza, who is the Senior Tax Manager at Vielto Partners, who are an international tax advisory firm that spun out from PwC, who have extensive experience of working with US tax and regulations with people either going to Portugal, planning to Portugal, or already there. So we have a really good panel today to work through the questions. But just a quick note, today's webinar is being recorded. So if anyone can't stay on for the full hour, you will be emailed a copy of the webinar, and it will also be up on our YouTube channel in the next 24 to 48 hours. And also, don't forget to share any thoughts. If you've got any questions, there's a chat area where you can post questions, and we will try and take as many of those questions at the last 10 minutes at the end of the panel. So what I'd like to do, it was recently, as we've seen in the media, it was recently reported in the New York Times that in the last few years, the number of US citizens moving to Portugal has increased dramatically. In fact, 239% increase in just the last 2 years, which frankly does not surprise me, having seen our own inbox at Portugal Pathways getting flooded with many US connected citizens that are looking for, a different perspective, whether it's through a golden visa, dual residency, or they're moving there full time under one of the D visa solutions. And I'm sure the panel can elaborate on any of this in terms of the questions around taxation that you may have. So what I'd like to do is now sort of really go and ask a couple of direct questions to the panel. Could the panel elaborate on some of the tax implication US connected citizens might have once they start to relocate to Portugal? Perhaps Pedro, if I could start with you and talk about this from a US connected citizens point of view in Portugal around their tax.
Thanks, Paul, for the question. So basically, when an US citizen moves to Portugal, it should take into consideration that as from that moment, that person starts to be taxed on a worldwide basis in Portugal. Okay, like that person also is in the US, so that person starts to be taxed on a worldwide basis on both countries. Okay, so it is very important before that relocation occurs to Portugal that person seeks for professional tax advice, and in order to structure their assets and their income as on a most tax efficient way possible. Also, other important aspect to take into consideration is that there is a double tax treaty between Portugal and the US, and that double tax treaty basically establish which country has the right to tax each type of income. However, the US, this double tax treaty also has a protocol which established that any US citizen continues to be taxed in the US, as the double tax treaty does not exist and it's not in place. So when that happens, usually the US is the country that will avoid double taxation, and for any source of income that is taxed in the US solely due to the reason that that individual has US citizenship. And to finish, other important aspect that needs to be into consideration is the end. I see that a lot of people that are in this webinar are already registered as non-habitual resident and is probably already living in Portugal. But I also assume that there may be some people here that still did not relocate to Portugal. So I would like to also say that the end of the NHR regime was something that happened in the beginning of 2024. Okay, the regime was revoked. However, there is still possibility, there is still a window to be able to benefit from the regime for 2024 under a transitional regime. But in order for that to happen, some conditions need to be met. Okay, so just wanted to highlight this, given that the NHR regime was a very popular regime among US people. Paul. Paul, I think you are mute.
Apologies. Thank you, Pedro. That was really helpful. I just wanted to ask Owen, obviously from his perspective, because he deals with a lot of US connected citizens on a daily basis. You know, are there anything else that you think you're seeing, or I know we're seeing a lot more people sort of relinquishing their US citizenship?
Yeah, thank you, Paul, and hello, everyone. Thank you for joining. Yeah, renunciation is an interesting topic, and may not be something that the people in the webinar want to hear about, but it can have some benefits from both a tax and investment perspective for current US citizens living in Portugal. However, just from a more general investment perspective, as Pedro rightly points out, any US citizens living in Portugal now have to consider their income streams, their investments, and their various assets from both a US tax perspective and a Portuguese tax perspective. So for us as investment advisors who are dealing with the taxation on both sides, we need to make sure that anyone we work with understands how their various investments, their various, it could be their retirement products, their various streams of incomes will be treated from a tax perspective, both in Portugal and in the US. And something that's quite important to be aware of is that the consideration of how that certain income will be perceived could be different in Portugal than it would be in the US. So that is one of the very key considerations is, say you think certain income will be pension income, it might not be considered that way in Portugal. So these are the types of things that we need to be thinking about when it comes to US citizens. But as you rightly say, Paul, one thing that is happening are more and more people are considering the route of renouncing their US citizenship. That is certainly possible. And it does open up a few different investment options. We'll get into a little bit more detail, I think, later on with some slightly more specific questions on exactly why that might be. But in general, there are definitely a lot more things to consider for US citizens now that they're dealing with two taxation systems. And that's something that the people on this panel are trained in trying to do for all of the potential people and everyone in the webinar today.
Thank you, Owen. That's helpful, and I must admit, Portugal Pathways' own inbox, we've had a number of American citizens that maybe wouldn't have done this in the past that are, you know, relinquishing citizens should take up some of those, and it's becoming slightly more commonplace than maybe it would in the past, and it doesn't preclude them from still being able to go to and visit family and friends regularly. So, Chris, I just wanted to, from your perspective, as you work with a lot of wealthy families, private wealth from the US, what do you think? What have you seen? You know, perhaps you could give us your take on it.
Thanks, Paul. Good afternoon, everybody. I think from my point of view and what we're seeing with our US families, the relinquishing of their US citizenship it's an option. It's something that gets looked at. How often that happens? I mean, you know, I would say it's probably not as often as we think. I think most people on this webinar who are US citizens are proud to be US citizens and kind of stay US citizens and keep their US passport. But what we do see with our families is they definitely want to be more European. So there are the options of getting other visas and other residencies and other passports. But it's very much a personal choice, I think, is where I would say on it. You're on mute, Paul.
Paul, you are mute.
Apologies, sorry, I was trying to cut out the interference. So I suppose from as you move to be spending more time in Europe, having a mixed portfolio of assets that, you know, not just US related, can have a lot of benefits. So Gary, as someone who's got, you know, a lot of experience and worked very closely with wealthy US connected citizens, what do you usually see or recommend for US citizens in Portugal with significant global assets? I know this depends on the person, very much on the individual circumstances, but what do you typically see and advise?
Yeah, thanks, Paul. As you point out, every client, every family is slightly different. As a general rule of thumb, I'd often say that simplicity is key. Often one country or jurisdiction doesn't always translate or work in another. And that comes down to either the type of account you're investing in or the type of product, or also the underlying investments. And actually, it's perhaps more important one considers the underlying investments, whether it's in a pension or a non-pension account. A lot of it does come down to what's inside that account. With families moving to Europe, including Portugal, I would suggest that they do review their assets before they move, because often what is popular or tax efficient in the US, for example, a US mutual fund, may not always be, well, A, transferable to Portugal or Europe, or B, tax efficient from a Portuguese or European perspective. And that takes me back to the simplicity point, because equally what might be efficient or popular in Europe might not be from a US tax perspective. friends, family, advisors will often come across the term PFIC, or Passive Foreign Investment Company. And that tends to be any collective investment, such as a non-US mutual fund, or an OIC, or even a unit trust, as we tend to call them in Europe. They tend not to be tax efficient from a US perspective. They also are a bit of a burden when it comes to even just filing your tax return. So often the advice is keep things simple, invest into direct stocks, i.e. direct equities, so in shares of a particular company, for example, and or direct bonds, or fixed income, as it's also known, such as US Treasuries. So that doesn't not only keep the portfolio or your account tax efficient, it keeps it nice and flexible as well, because if your plans, your circumstances do change and you do decide to leave one country or jurisdiction, then a portfolio or account of direct stocks and direct bonds often is transferable, and therefore it won't mean that one would have to have a fire sale of all the assets if we were to move on from one country to another. So my advice for most clients is simplicity is key, and just have a review before you leave any particular jurisdiction to make sure that the assets that you do hold are compliant and efficient in the country you're moving to.
Gary, thank you, Gary. That's really helpful. Pedro, as someone who has experience of advising people from the US on double taxation considerations between Portugal and the US, what are the key things that people need to do or consider from a tax perspective now that they are, based in Portugal or planning to be based in Portugal, and how, if they have NHR tax status, how might that come into it?
Okay, Paul, thank you. So that's a good question, and I'm checking here in the chat. We already have a lot of tax questions, so I will try to summarize as much as I can. But basically, the NHR regime, it's a very successful regime here in Portugal. That one of its major advantages is that it can allow for exemption from taxation in Portugal on foreign sources of income. Okay, and the regime was implemented in 2009. Then the first amendments to the regime was in 2020, when there was a change on the taxation applicable to pension income. That was before March 2020. The foreign pension income was fully exempt from tax in Portugal. The only condition is to be foreign sourced, and after March 2020, the foreign pension income is taxed at a flat rate of 10%. The key point that I would like to highlight during this session is that a lot of people think that okay, if I am a NHR, if I am a non-habitual resident, then all my foreign sourced income will be exempt. And it doesn't work necessarily in that way. Some conditions need to be met in order for the exemption to apply. I can, for instance, if we are talking about employment income, I need to, in order for the exemption to apply, that employment income needs to effectively be taxed in the country of source. But if we are talking about passive income, namely investment income, capital gains, or rental income, in order for that exemption to apply on those sources of income, the country of source needs to have the right to tax that income under a double tax treaty. And if the country of source is a country with which Portugal does not have any treaty in force, we need to look into the rules, the general rules that are in the OECD model convention. With that being said, general rule, when we are talking about interest, dividends, and rental income, those sources of income are usually, the country of source usually retains taxation rights on those sources of income. And so, generally speaking, those sources of income are exempt from tax in Portugal. Capital gains, we need to split the capital gains into two different categories. Capital gains from immovable property, which in principle is also exempt from taxation in Portugal under the NHR regime, because again, the country of source retains taxation rights over that type of capital gains. But when we are talking about securities, shares, capital gains arising from that type of instrument, there isn't an exemption available under the NHR regime, because usually only the country of residence, in our case Portugal, only Portugal retains taxation rights. To finish, there was recently a decision from the Portuguese Tax Arbitration Court with respect to the capital gains arising from the sale of securities, shares, bonds, investment funds, etc., in which the Tax Arbitration Court argued that the US also has the right to tax these, because this type of income, because the protocol, which is also part of the double tax treaty, states that a US citizen may be taxed in the US, as the double tax treaty is not in force. So with this, what I want to say is that if someone that is already a tax resident in Portugal is expecting to realize a capital gain on the sale of US security, when I say US security, I say a US stock, a US bond, a US fund. That capital gain, after the filing of the tax return, the tax authorities will not grant the exemption with 99% sure. But then there is a window to make a claim to the Tax Arbitration Court based on this recent decision that was published to claim the exemption on that type of capital gain.
Thank you, Pedro, and your insight into this, I'm sure, is of value. I can see there's a lot of chat questions coming that were very specific questions. As I said earlier, some of these questions, some of our panel will try and answer as we go, but if they're too specific, we may have to take those offline, and don't worry, we will come back to everyone. I mean, we're also seeing, you know, NHR, I see 20% of the people that answered our poll are not actually in Portugal. So there are changes already coming in with what they're calling NHR 2.0. And some of these things you will have to take offline because they're going to be very personal to your situation. So
Paul, just to finish that point, for those people that still did not relocate to Portugal, so the rules to be able to benefit, because I didn't mention, but very quickly, the rules to be able to benefit from the NHR regime for 2024 are basically the NHR for 2024 is basically available to people that were already thinking of relocating to Portugal in 2023. So for someone that had already, for instance, an employment contract or a promissory employment contract until the end of 2023, people that had already bought a property or rented a property before October, people that started a visa process or a residence permit process before the end of the year. So it's applicable to that people. Okay.
Yeah. As we're seeing ourselves, a number of people are coming in on those grandfathering exemptions even in 2024. But I think from stuff that we've seen in recent weeks, even the NHR 2.0 or son of NHR, it does look that there's still going to be some strong benefits on worldwide income, but it very much depends on the individual. So continuing on the topic, Gary and Owen, in the US 401k and Roth IRAs are quite common, as we see. What is the best option for US connected citizens to consider once in Portugal? And would it be good to also hear from Pedro afterwards, just on the tax perspective? Gary, do you want to go first on that one? You're on mute. Gary, I don't think we're hearing you. So perhaps, Owen, you could pick this one up, and then when Gary's down comes back.
Yes, yeah. So this is where having NHR status versus not, it can be important as well. But with your 401ks, IRAs, Roth IRAs, as I mentioned earlier, they may not be considered in exactly the same way in Portugal as they would be in the US. And Pedro can give a few more specifics on how Portugal will define a pension in a minute. But one key aspect is how you contribute and whether there's any employer-linked contributions to it. And this is where, sort of on a case-by-case basis, you need to understand exactly how your 401k was contributed to, how you will decide to take distributions from it, that sort of thing, because firstly, that will dictate how it will be taxed in Portugal, both under NHR and post NHR, and how it will be taxed will dictate the sort of strategies or various things that you might want to do with those accounts to get the most out of them, or to not lose some of the, say, benefits that you would get in the US. So, for example, for someone living under NHR in Portugal, they have a 401k. Generally, 401ks, because they're employer linked, if you take a distribution from it, would be considered pension income, depending on the timing of your NHR. You'll be paying either 0 or 10% tax on that, and whatever tax you'll be paying on it in the US as well, depending on your income levels. So if that's the case, under NHR, maybe a good idea to, depending on your situation, take out some of that 401k income. And then what you can do for a post NHR world is pension income is obviously, it is taxed at progressive rates, so it can be up to as much as 48%. So the idea of taking advantage of NHR whilst that is considered pension income, and then investing that money so that after NHR you receive capital income or capital gains that are taxed at a more favorable 28% rather than the progressive rates. So these are the types of things that you have to consider. Firstly, you have to consider how that account will be taxed both in Portugal and the US, and you also have to consider your NHR status, and also you have to consider how much income you need right now, how much income you might need in the future. All of these things go into understanding what you want to do with those accounts, how you want to invest them. And I think Gary will have some of the specifics on how he would invest them with LGT, for example.
Yeah.
Gary, I think we can hear you now.
Yeah, I'm back. Yeah, apologies about that. So yeah, it does depend on the client and what sort of investment objective you're looking for. Generally speaking, I find that clients, unless we require a regular sort of income, they tend to go for a more growth orientated portfolio. With a view actually that they don't require this pension pot and see it as something they can pass on to the next generation. In contrast to that, some are obviously relying on their IRA, Roth IRA, inherited IRA to support their standard of living and retirement, and may opt for a more income orientated plan. That all comes down to the individual, but for every account that we manage here at LGT US is dedicated to one or the other, and it's customized to a client's own requirements. When it does come to taking that withdrawal, obviously with post-tax advice, we are able to send on the withdrawal to the client's nominated bank account, so it doesn't necessarily have to be an account in the US, for example. We are flexible from that sense, and that's to the overall flexibility of the account, being able to send any distributions to a non-US bank, for example.
If you wanted to add to that,
Pedro,
yeah,
yes, I would also like to add, because I see in the chat and also that there is like a big question regarding, okay, what I have a IRA, a Roth IRA, I have a 401k. What is the tax treatment when I'm in Portugal, when I'm Portuguese tax resident? And I will try to clarify that topic, even though that is not a straightforward topic, and that's why you see a lot of different information coming from different places. But I will try to basically explain what are the consequences in Portugal. So basically in Portugal, we don't recognize foreign retirement accounts. Okay, we have Portuguese retirement accounts that have a very specific tax treatment, like these kind of plans have in the US. But basically, when we are talking about a retirement account, the tax treatment in Portugal will depend on two things. Basically, who funded the plan. So if it is an employer plan, or if it was contributions funded by the individual, and how are you going to I said two things, but it's three things. The second point is if my contributions were or were not taxed when I made the contributions into the plan. And third, how, in which way I receive the benefits from my retirement account. If I receive as capital, like a lump sum payment, or if I receive a temporary or a lifetime annuity. So all these three aspects will have implications on the tax treatment in Portugal. So basically, when we are talking about a Roth IRA, we are talking about a plan that the contributions were made on post-tax income. Okay, so the rules in Portugal is, okay, if I am getting the amounts that I have in my Roth IRA through a lump sum payment, so any income generated by my Roth IRA will be taxed as investment income, and there may be some exclusions from taxation if I comply with certain conditions. So it's not pension income when I receive a lump sum payment from my retirement account. In the other end, if I receive a lifetime or temporary annuity, so in that case, it is going to be considered as pension income. And one key rule in Portugal is that you are not taxed on the contributions that you have made into a retirement account. Okay, so which means that for a Roth IRA, I will only be taxed on any income generated by the plan. And we also have another rule in Portugal stating that if it's not possible to determine the amount of the contributions that I made into the plan, so I assume that 85% is contributions and 15% of the fund amount is income. So this is for a Roth IRA. For a 401k or for a IRA, we both know that we know that these kind of plans are the contributions are on pre-tax income, and for that situation, the Portuguese legislation is not clear whether or not I will have to pay taxes on pre-tax contributions. Okay, it is possible to submit a binding ruling to the Portuguese tax authorities to see what their understanding on this matter is, but it's not 100% clear. And for a NHR, it doesn't have, let's say, a major implication, and that's why maybe no one still did a binding ruling, because before the pension income was exempt from taxation in Portugal, and also the investment income from a US source is also exempt from taxation under the NHR regime. So I would say that this is more a problem for a post NHR or for people that is not registered under the NHR regime. And finally, if I receive a 401k, for instance, also through a lump sum payment, the employer contributions will also be taxed in Portugal, okay, at a flat rate of 10% for people that is registered under the NHR regime. And I hope that I was able to clarify something regarding the taxation of these type of plans, but it's indeed not a straightforward matter.
Yeah. No, I understand. I think you did a good job of giving some great insight there, but we can't get away from, the fact that some people on this group will need personal advice relative to their own situation, which, they can reach out to us afterwards and we can set that up. I can see one chat question in that's then been backed up by 3 other people. So perhaps there's a question here from Catherine. Is it possible for US connected people residing in Portugal to use a trust structure to optimize their taxation? What about life assurance products? What are the tax implications under NHR and non-NHR? I don't know who wants to take that one, whether as a combination of Pedro and Owen. You're on mute, Pedro, sorry.
I may start maybe with the tax implications. So regarding a trust structure, so in Portugal, we do have taxation rules for trust structures, okay? And basically there are 2 taxable events in Portugal with respect to a trust structure, which is when there is, and it's different from the US, because in the US, the trust is a transparent entity, and all the income obtained by the trust is taxed at the individual's level. But in Portugal, it doesn't work in that way. So in Portugal, an individual, it's only liable to taxation on when there is a trust structure, when the trust first makes any distributions to its beneficiaries. That is one possibility. And the second one, if the trust is revoked and the beneficiaries receive the proceeds from the trust. And in both cases, so in case of a distribution, this is going to be considered as investment income, and in case of the revocation of and extinguish of a trust, it will be considered as a capital gain on the assumption that the beneficiary was the settler of the trust. Regarding the life insurance products, that is also considered is considered any income arising from a life insurance product is considered for Portuguese tax purposes as investment income. Okay, and I will explain, but there are some products that may have some tax advantages treatment here in Portugal, and can benefit from an exclusion from taxation up to 3/5 of the taxable income. So general rule, the investment income in Portugal is taxed at 28%. This can lead to an effective taxation of up to 11.2%. I don't know if you want to also take a lead on this one.
Yeah, so the unit-linked life insurance structures, and this is where the consideration for US citizens is different, because they are tax efficient in Portugal. However, they're not tax efficient for US citizens in terms of the US taxation system. Part of what they are life insurance wrappers, and that wrapper element where you would usually see some gross roll up or no taxation on the gains until you take withdrawals. Unfortunately, those tend to be kind of looked through by the US. That wrapper doesn't really work, and you can be taxed on the gains on an ongoing basis. A couple of the other issues are to do with some of the US regulation for foreign accounts. So a lot of the product providers, unfortunately, don't work with US citizens. And the final thing is Gary mentioned them earlier, but to be most efficient, these life insurance structures need to be investing in PFICs for various withholding tax reasons, and basically they're always invested in Irish domiciled or Luxembourg domiciled funds, and as a result, there'll be PFICs, and from a US tax perspective, there'll be additional reporting requirements and can be harsher tax rates as well. Unfortunately, even though they're efficient in Portugal, they tend not to be efficient in the US. So those alternative life insurance wrappers are not something we recommend for US citizens. The key things for US citizens living in Europe to be considering for all your investments are to avoid PFICs. And this is one thing where people can get into issues if they're doing their own trading or on various accounts. You can invest in companies, or you can invest in ETFs that are European based, and you don't realize they're PFICs. The other key thing for anyone in the EU, you generally won't get access to US ETFs. They don't comply with EU regulations. So for Americans trying to invest, unless you have a professional advisor who can bypass the individual investor limits that are placed on it, your only options for investments that avoid PFICs and that you'll actually have access to are going to be direct stocks and bonds in the US. That is why it is so important to have experienced advisors both in Portugal and in the US to kind of help you navigate those various different pitfalls that can be very easy for Americans to fall into. And just, I've seen someone quickly just say, what is a PFIC? I'll just repeat that again for anyone who missed Gary earlier. It's a passive foreign investment company, and essentially any standard mutual fund that you would see that is domiciled in Europe would be considered a PFIC. So it's any company that most of their income is passive or investment based. So those are various pitfalls, and that's really the main things to consider. And that's why it's very key to have people who are aware of both systems to help guide you through that. Just another point on that really is for Americans moving over to Europe, they may have found they've lost access to their investment accounts because they're using a European address, those types of things. there are ways to around that. There are ways to invest through people like Gary at LGT who can take those assets over for you. So if you lose access to your US accounts or to your US advisor, there are people who can take care of you in Europe. Yeah.
Okay. Thank you. I think to be honest, it comes back to the same. Sometimes.
Can I just say?
Sorry. Sorry, Chris. Can't hear you. Looks like Chris is frozen.
All I wanted to say really is working with our family.
You've gone on mute. Yeah, I think you've got a lagging issue.
All I wanted to say really is that working with our families and what we do, it is really essential.
Yeah, I think you may have internet issues there, Chris. I'll come back to you on this in a second, Chris. Obviously, Gary and Owen have a lot of experience, as does Pedro. The key thing that I'm hearing, we see, sometimes as US connected citizens, just having a US advisor, you need people that have knowledge of both systems and arranging calls with partners, so you have the right international tax partner that understands both, and having wealth managers that understand both systems, not just one system. I'd just like to move this along maybe a bit. Gary, within the Portuguese tax framework, are there any other things that you'd recommend in terms of your side of things? Obviously, people like Johan and you work together, putting together investment options for US citizens that might optimize their portfolios?
Yeah, thanks, Paul. I think hit all the nails on the head in terms of PFIX and wrappers. Generally speaking, a lot of wrappers are European wrappers, will only allow permissible investments, and as mentioned earlier, those permissible investments tend to be funds or non-US listed funds, which unfortunately are tax punitively from a US perspective, and therefore any benefit you might get from, let's say, an offshore bond, an onshore bond, 75 that the US don't structure will simply look to tax the underlying, and not step on Pedro's toes too much, but and just to put it into add some proper context, when we say punitive tax, it is the highest rate of federal income tax that the US look to tax PFIX on, and that's not just on any realised gain. It also has a reporting burden. So even if you hold a fund which is considered a PFIC, there is an ongoing annual reporting burden where you have to essentially declare to the US, you hold this fund and you have to report the opening closing balance each year, and they may even look to impose some penalties for holding it. And then when you come to sell it, they may impose the highest rate of US federal income tax. So sadly, there's very few investment options that fall is investing in non-US fund PFIX, and the simplest approach tends to be investing in direct securities, so direct equities or stocks, as you might know them, and direct bonds or fixed income, as they're also known. That also helps to reduce the reporting burden on an annual basis. So whether you file your own taxes or use a specialist firm like Pedro's, but it also helps keep the cost down, because a lot of the time these funds, whether it's a non-US fund or a US mutual fund, will have an inbuilt cost to them. And actually, when you look at the overall cost of your investment account, that if you have an account full of funds, it does tend to add up. So not only just following a direct equity and bond approach avoid those additional costs, but it keeps it nice and tax efficient on both sides of the pond.
Thank you, Gary. That's really helpful. I can see a few of us are having a few sort of technical difficulties, so I'm turning cameras off when others are speaking, just to give everybody a bit more bandwidth. In terms of the chat, we've got a few questions coming in, and one question: why can't you continue using Schwab, for example, to continue buying ETFs if you live in Portugal and are a US citizen? Does anyone want to take that one? Is that one for Johan or for Gary?
I can jump in on there. So I'm currently in the process of taking on a US client who has a Schwab account. And unfortunately for them, it's the fact that they live outside of the US that Schwab will no longer work with him. And that's simply down to him having a non-US address. And that's what it boils down to a lot of it. Secondly, it comes back to the underlying investments as well. Their account tends to be full of US mutual funds. A lot of those mutual funds will not permit non-US resident investors. So whether it's from an underlying fund perspective or the provider, in this case Schwab, they often won't work with someone who is resident outside of the US, and therefore it leads lots of clients, and whether it's Schwab or any of the other bigger providers, it leads lots of clients to try and locate someone outside of the US that can look after them, LGT being one of them.
Thank you, Gary. Chris, you had a point before we lost you.
Yeah, I'm hoping that you can hear me now.
Yeah.
So really, there's a lot of questions in the chat, and a lot of the guys are talking about things. I think from my experience working with the wealthy families that we have coming over from the US, to beautiful Portugal, they come for the sunshine and everything. I think the key takeaway, the key part that we need to recognise is there are lots and lots of interconnecting regulatory compliance and different tax regimes that can get very, very complicated for people. And what we do, and I would I think everyone on this webinar should be doing is just working with professional advisors because everyone's individual. It's to work with professional advisors to manage the money in the way that you want. But the big problem you have is if you get things wrong, it can have catastrophic consequences, both tax and investment wise. And I think keeping accounts in the US, we've had people say to us, why don't you, just use a friend's address in the US or do something like this. I just think that if you're going to do this and you're going to do it properly, then you need to be taking advice in Portugal from US compliant, regulated investment and regulation and tax experts. And that's what we do. And I think that's really, really vital. And there are ways round the way people can do things. As I say, that you'll be told by certain people that you can do certain things. I saw somewhere in the chat, that a fund provider or a platform provider said that you could purchase this and that when you're in Portugal and you can't. Well, I just think it's vital that you use experienced and regulated advisors who know what they're doing and will walk you through this. And that's what we do at every step of the way. It's really, really important. I can't emphasize it enough. US taxpayers, US connected people are taxed differently, and they need to be aware of that. And our families are very keen that what they do is they stay on the right side of all the regulation and all the compliance.
Yeah, I think that's very well said, Chris. We all, Portugal Pathway, our role in this is to put the right people with the right partners, and in our experience, having a call, even if it's a three-way call with a tax advisor that understands the complexities of US tax and Portugal tax, and then wealth advisors like BG on a call that understand both, you're going to get so much more, because there's only so much we can answer legitimately in a chat, because there's so many different variables, because all of us live a more complex life, because we travel more, we get married and divorced more, and there are many other reasons. I'd just like to switch it now just quickly. I know Pedro's been asked to summarize what he said earlier, but before he does that, Pedro, in terms of in terms of capital gains, what are the things that US connected citizens need to consider? I know you touched on this a bit, but maybe you could just elaborate a little bit more on the whole mitigating capital gains under NHR or not, as the case may be.
Yeah, Paul. So, but before start on that point, so I know that we talked here about in which broker should I have my investments and so on. What I also would like to highlight, because from my experience, a lot of people does not realize this, is that from a Portuguese tax perspective, it is irrelevant the broker in which you have your investments. Okay, isn't it what defines the taxation of your assets? So basically, in Portugal, in order, like I spoke in the beginning, in order to determine whether or not a certain type of income will be exempt from tax in Portugal under the NHR regime, I need to look into the country of source of that asset. Okay, and for instance, if I'm talking about a stock, the country of source is the country where the company has the headquarters. If I'm talking about a bond, the same thing. If I'm talking about a fund, in which country is the fund domiciled? So that is what defines the taxation in Portugal. And one advice that I always give is that people must avoid, for instance, to have investments in what we call in Portugal offshore jurisdictions, because it's not tax efficient from a Portuguese tax perspective. And also other thing that works really good from a taxation point of view is to have US investments. And let me explain why. Because as I explained in terms of the NHR regime, the investment income it's only exempt from taxation in Portugal if the country of source retains taxation rights. And in the most of the double tax treaties, we usually have an article for interest, we have an article for dividends, we have an article for royalties, but then we have other income article. So basically, for any other investment income that doesn't fall under any of those sections. And this article, it's different from treaty to treaty. And what I can assure is that the double tax treaty between Portugal and the US, in this specific article of other income, the US, the country of source, retains taxation rights, which means that any investment income arising from a US fund, I can assure that it will be exempt from taxation in Portugal. And I can assure in this way that is tax efficient from a Portuguese tax perspective. So this is only to clarify in terms of investment income taxation. In terms of capital gains, Paul, as I noticed in this call, basically the capital gains arising from the sale of securities, and when I mean securities, when I say securities, I mean stocks, bonds, investment funds, mutual funds, any security. Basically, it's the only source of income under the NHR regime that it's not possible to get an exemption. Okay, so you need to pay capital gain tax in Portugal. The flat rate in Portugal is for capital gains is 28%. In 2023, it was introduced some rules for what we call now short-term capital gains. And short-term capital gains it's basically for people that own stocks or securities for less than 1 year. I think that the same difference exists in the US. And for this type of capital gains, if the taxable income of the taxpayer is above 81,000 to be more precise, those capital gains may be subject to progressive tax rates, meaning up to 48%, which is so we need to be careful regarding the capital gains. And one aspect that I mentioned is that if some US connected citizen expects to realize a significant capital gain or from the sale of a US security, what I would suggest to that person is to, of course, after the filing of the tax return, the tax authorities will assess the 28% tax, but that individual can afterwards to present an appeal before the tax arbitration court and ask that and claim that the capital gain is exempt. That is something that, for instance, based on the recent decision that there was, I would expect the tax arbitration court to follow the same decision. However, we cannot guarantee that that could happen. Okay. Paul, you are muted.
Thank you, Pedro. That's really helpful. I'm conscious we're over the hour now, and I'm just going to take one last question that I see in the chat, and then I'm going to get each of the panel to summarize. But I'd like to say perhaps one of my colleagues who are moderating this can put a contact. So if anybody wants to have a direct meeting or a question answered, they can email our team and they can come back with their specific questions and situation, and then we will try to answer it, or we can arrange a discovery call. But I've got one last question before I get everyone to summarize. Gary, we've had a lot of questions about Roths and IRAs and the different advantages for retirement savings. How is this managed, and is it efficient once you're an EU resident in Portugal? Gary, perhaps you could just sort of this a bit further before we summarize.
Sure. So US pension plans, whether it's a traditional IRA, Roth IRA, are still tax efficient from a US perspective. But as the panel mentioned earlier, it all depends on the source of income and how Portugal would treat it from an investment perspective, and whether it's considered a pension or an investment. But from LGT's approach and how we approach IRAs in general is, again, just making sure that underlying investments are compliant in both jurisdictions, trying to be thoughtful about what we invest into, and in particular what sort of geographies we invest into as well. So again, everyone's investment approach or investment objective will be different, but we like a nice diversified portfolio or a nice diversified account which will invest into a mixture of direct stocks, direct bonds from a range of jurisdictions and also a range of companies, just to try and achieve as many objectives of the client as possible.
Thank you, Gary. That was very helpful. So I'd just like each of you, if you was to give the audience, as we summarize it, if you were giving the audience one piece of advice to take away and remember, and I'm sure a lot of this is about having the right advisors from both sides, but could you each of you summarize, the key takeaway?
I'm happy to start as the last speaker. So in short, PFICs are bad, and often simplicity is best when it comes to account types or underlying investments.
Owen, do you want to?
Yeah, I was just going to say, obviously, as US citizens who are resident in Portugal or could be resident in Portugal, everything you do from an investment perspective, you have to consider the implications in multiple jurisdictions. So getting the right advice, feeling comfortable in the investments and the assets that you have in both jurisdictions are extremely important.
Pedro?
Sorry. Yeah, I think that the main message here is that, we have two types of people. For people that still did not relocate to Portugal, it's important to understand what the tax implications are basically on their sources of income before they take the final decision of moving, before they are fully aware of the consequences. For people that is already here and have a lot of doubts regarding the taxation of the retirement accounts and so on. My suggestion to that people is to basically to get an advice for someone that is experienced. Of course, I can assure you that no one can assure you that 100% sure the treatment will be in that way. What I can do is say, to the best of my knowledge, basically these will be the tax treatment. There is this risk, that risk, and that risk. The taxpayers in Portugal may always request a binding ruling to the tax authorities, and that ruling binds the tax authorities to that situation and that taxpayer. So if we are talking about significant amounts involved, that can be done. Okay, so I see that there is still some questions in the chat regarding the retirement accounts, and again, the general rule, as I said, is that in Portugal you will never pay income tax on contributions made by the individual. That is 100% sure. Contributions that were made on pre-tax income, you have a risk there. So we don't know how the tax authorities will argue on that, if that is taxed or not. You will be taxed depending on whether you receive a capital, a lump sum distribution. You will be taxed as investment income. If you receive a temporary or lifetime annuity, you will be taxed as pension income. The capital gains tax arising from the sale of securities at ETFs, stocks, bonds, etc., is taxed at 28%. And there is still the new rule I mentioned for short-term capital gains. And any plans for the future for post-NHR, I would say that the best strategy is to try to live from capital. So try to receive as much as you can while NHR, and you can maybe benefit from some exemptions, and then live from capital, because in capital you cannot, in Portugal, you are not taxed on capital. So I would say that this is the best summary that I can do from this call.
I can tell from the chat we're getting a lot of thank yous. Clearly we can't answer everything. Chris, your final summary, takeaway? I think we
As Chris is not able to speak, maybe I can also answer other questions here from the chat. So there is a person that is asking regarding the sale of his US property and rental income. As I said during this call, that type of income will in principle be exempt from tax under the NHR regime. So it's irrelevant whether you do it during or before or after the relocation to Portugal. But again, it's always important to, as I said, and I would like to highlight this. It's very important to also seek for professional tax advice and to see all the variables to confirm the treatment of the various sources of income. I don't know, Chris, if you are already here or not.
Still not hearing Chris, unfortunately. So what I'll just summarize then. So from our point of view, there's obviously a lot of questions that we couldn't answer every single question. But if you reach out to us through one of my colleagues, steve.phil at Portugal Pathways, portugalpathways.io, we will come back to you on any individual questions, or we can arrange a discovery call with any of the panel or a combination thereof. Our next webinar is next week, next Tuesday, where we've got an event, a webinar to do with investing in Portugal. So we're much about talking about golden visas and the different regulated investment funds around that. And then we've got another webinar in May that's linked to some new reports coming out about Portugal's real estate market. So I'd just like to summarize and thank everybody for their input. Thank you very much for a very engaged chat. There's a lot of questions we've got to come back to. You can watch back this. So I see there's a few people saying, I didn't quite catch that. Could you repeat it? Well, it'll be on the watch back or reach out to us directly. I don't know if have we lost Chris completely now? I think we probably have. I'd like to thank everybody. And hopefully you got a lot out of it. From our perspective, the key thing is make sure you've got advisors and you get advice to stay on the right side of things, both from a US compliant point of view and a Portuguese compliant, and people that actually are regulated to advise on both. Thank you, panel, and thank you, audience. Talk soon.